Continuing our journey across the EU AML package, I would like to introduce you into a more detailed overview of the AML Regulation 2024/1624, which is the common rule book for all obliged institutions covered by this regulation across the EU. The big difference, as we outlined in the previous reel, is that this regulation sets one set of rules for all, although the AML authority is going to issue a number of guidelines adding more precise recommendations and expectations for a specific groups of obliged institutions, because European Commission recognized that there is no one fits all approach towards due diligence. It has to be risk based, and the risks associated with money laundering, terrorism financing, or sanctions is different in high volume operations like financial institutions and for instance, notaries public or lawyers supporting their clients in executing business transactions. So the guidelines will be published somewhere around summertime 2026. AMLA has 2 years to develop them, but that's mostly due to the fact that at the moment AMLA is actually constituting its operations. So there is election of the board of directors, and there will be shortly recruitment of personnel supporting this authority. So and a shift of responsibilities associated with AML compliance from, for instance, European Banking Authority and other supervisors of the market in this specific area of AML, terrorist financing and sanctions compliance. Today, I'd like to highlight only a few, in my opinion, very important elements introduced by the regulation, and I will continue this journey with you in the coming reels. Today, I will highlight only a few elements, but elements that, in my opinion, are the game changers for in the field of AML. CFT and sanctions compliance. First of all, the regulation highlights the fact that the obliged institutions are the gatekeepers, and there is the shift of the philosophy, this change of paradigm I've mentioned before in fighting money laundering. It's impossible to fight money laundering and avoiding of sanctions only by the law enforcement agencies, because they are not they don't have sufficient resources, they don't have sufficient understanding of all businesses operating across the EU. As it's effectively impossible. It's like only 2% of all containers coming to the European ports are vetted physically by customs and excise officers, or only 2% of criminal assets are subject to seizure by law enforcement. So 98% of criminal assets are still in circulation, or the fact that only 1-2% of law enforcement is engaged with fighting fraud, and 98% of the officers are fighting other traditional criminality. So this means that if we want to stop criminal groups, organized crime from expanding, we need to change the paradigm of fighting against this phenomena. And one of the elements is to engage the gatekeepers, so those who are misused for the purpose of money laundering. And for instance, the good examples is the fact that very often in the past the professional lawyers were engaged by criminals knowingly or unconsciously to represent legal entities or individuals in opening bank accounts, in providing some assurances to other obliged institutions about the identity of the client or the client's business operations. And because this information was provided by respected professionals, they had more trust. The typical bias resulting from the fact that some information is provided by an individual whom we trust by definition. It's like an officer in uniform is more trusted than the average individual met on the street. So the gatekeepers are going to be more involved. There will be extended catalog of this gatekeepers. So, for instance, some football clubs will be added to the list, or managers dealing with transferring of football players from one football club to another. And all of that if with a view to prevent criminals from laundering, from executing the terrorism financing operations, or to mitigate the risk of non-implementation or evasion of targeted financial sanctions. The targeted financial sanctions as a broader term is something new in the AML regulations, because usually sanctions were regulated separately, and we will have a separate we have already a separate sanctions directive which is going to enter into force next year, July. But this directive will be more focused on fines and the fact that the problem of sanctions goes beyond the obliged institutions under the AML regime, and therefore more entities have to be involved, and entities have to be aware that breaching sanctions, bypassing sanctions is not only their legal obligation, but it's also the element of severe liability for non-compliance, including, for instance, dissolution of the business operations or cancelling of licenses for doing regulated business or engaging in regulated business. So therefore, this regulation will be kind of strengthening the concepts included in this AML regulation. But it's worth to highlight that the sanctions compliance, not only anti-terrorist sanctions, but all targeted financial sanctions are included in the scope of the AML regulation and will apply to all. So, for instance, the requirement for sanction screening will apply to all gatekeepers, to all the obliged institutions covered by the regulation. What is very positive, in my opinion, in the regulation is the fact that basically the regulation is going to apply to the whole group of companies, so to holding undertakings, and these undertakings will be able to benefit from the economy of scale, which means that they will be able to rely on certain compliance actions, like, for instance, KYC programs of their subsidiaries, and this effort made by one of the members of the group of companies will actually provide assurance and will be accepted as sufficient or due diligence in respect of customer onboarding by other members of the group of companies, group of companies. The beneficial ownership, the change here will refer to the fact that at the moment we generally assume that beneficial ownership constitutes the 25% of ownership or control, and if we cannot establish who owns or controls the entity in 25% or more, then we go for those who manage this entity, and we claim those individuals are the beneficial owners. The regulation introduces additional element, which is the risk-based approach in defining beneficial ownership, and gives the European Commission the possibility to lower the threshold, the percentage threshold for beneficial ownership for the higher risk businesses or higher risk categories of customers. And the European Commission will have a freedom to issue, or AMLA will have a freedom to issue the guidelines in this respect, lowering this threshold. So we will not have one fits all threshold, but this will be risk based and will require more diligence in identifying the ultimate beneficial owners. But obviously this gonna be also supported by the fact that under the 6th AML directive, the member states are also obliged to provide the registers of beneficial ownership and ability to access these registers from a single point of access and see all the beneficial ownership of entities registered and established at the soil, on the soil of the European Union member states. In respect to Article 75, which is already broadly discussed, it's a very good step forward, which is the possibility to build the partnerships for information sharing. And first examples of these partnerships we already can observe in the business circulation. However, the regulation in Article 75 states in Article 75 that that there is a possibility to exchange information not only between group members, which is stated so far in the AML directives, but also in certain cases between credit institutions and financial institutions and other entities as well that operate within networks. So for instance, if we have law firms representing two sides, two parties involved or engaged in M&A operations, so mergers and acquisitions, there will be possibility to exchange some information between these law firms as obliged institutions that represent parties in the M&A transaction. The other interesting and helpful feature of the AML regulation is the fact that there is the obligation, as I said previously, to verify the presence of a beneficial owner and a customer, and all individuals representing the customer on the targeted financial sanctions lists. And that obviously will also require to verify this presence on those lists by the obliged institution. So potentially also broader application of tools supporting this activity. Same with publicly exposed persons. And the AML directive, the 6th directive, will support this activity by providing the lists of PEPs available publicly, and therefore it will be much easier to identify those publicly exposed persons and people associated with them. And last but not least, the regulation requires to look not only at the identity and verification of identity of the client, people representing the client and individuals being the beneficial owners, but also to look at the intended nature of this relationship or a nature of customers' business, understanding that in the context of the AML risks. More to come shortly. Thank you very much for bearing with me, and see you in the next episode.